Sports and Stocks. QB, Quality Business Investing. By Bud LeBeaton. Introduction. Offense, defense, and special teams is a great place to start. This book describes my ideas about investing in the stock of a winning business. I write this from my point of view as a sports fan. Mixing sports talk with investing talk can stimulate your thinking. In this entertaining way, you can think about your approach to finding a profitable stock. Our goal is to find HQB, high-quality bargain. I will show you how I find HQB using knowledge and skills applied using the ideas of offense, defense, and special situations. After reading this guide, it is up to you how you execute your game plan. This book could have been called The Athlete's Guide to Stock Valuation. However, I want to make this one fun and easy to read. So, I chose the title Sports and Stocks. This is about my view of popular sports, and how these ideas can relate to successful stock picking. This book differs from my other ones, because this one contains new stock examples and some motivational talk. Chapter 7 gives you my 2-minute drill. There, I show you a quick way to identify a good business to add to your watch list. First, I'm a big fan of the Chicago Bears football team. As I write this, the Bears just reported to training camp. I will be going down to Bourbonnais, Illinois on Saturday with one of my friends. There we will watch the Bears' first practice in shoulder pads. I also like the Chicago Bulls, Chicago Cubs, and Chicago White Sox. However, the Bears are the team I follow the most. I have done this since the time of Walter Payton and the Super Bowl shuffling 1985 Super Bowl winning team. And, since my younger brother Clark was a great high school running back, our family learned more about football during that time. Your experience in playing and watching sports will differ from mine. However, if you are a keen observer, you will notice several factors that go into creating and maintaining a winning team. Whether it is football, basketball, baseball, hockey, track and field, and many other sports, there is a goal to be won. And, to continue winning, there needs to be good coaching. Coaching can come from head coaches and assistant coaches as well as experienced mentors. There is a chapter on coaching, chapter 4, later in this book. I talk about coaching because we can learn a lot from the coaching perspective. Coaching can also come from self-teaching and continuous self-learning. So, when I refer to coaching, I will mention both the outer coach and the inner coach. Your inner coach will be trained to look at stock investing in terms of goal setting, fear managing, and dealing with wins and losses. In sports, we often look to the best for learning the basics as well as the best practices. In value investing, I have studied the best in Warren Buffett and Charlie Munger. So, if you like this book, you may read my other books about them. Making this book a fun read, I divide the chapters into these athletic chapters: 1-point football, 2-point basketball, 3-point baseball, 4-point coaching, 5-point mental toughness, 6-point examples, 7-point the 2-minute drill. Forgive me if I did not include golf or your favorite sport. Since I competed in cross-country running and track and field, I will mention a few tidbits related to those along the way. Our goal is to find HQB, a high-quality bargain. I will show you how I find HQB by first stating the most important idea: intrinsic value of a single share of stock. The intrinsic value per share of a business will be talked about several times in this book. Later, I show you how to estimate this goal. I hope you enjoy my book and criticize the hell out of it. This way I too will learn from your experiences. Chapter 1: Football. I like watching NFL football because of the strategy involved. This includes many variables of players, formations, and plays. Together, their goal is to move the ball to the 100-yard line. This is how they put points on the board. In some ways, value investing can be viewed as a simpler 4-step process, thanks to Warren Buffett. He said, "Charlie and I look for companies that have 1. A business we understand, 2. Favorable long-term economics, 3. Able and trustworthy management, and 4. A sensible price tag." Understand that winning football comes down to deciding on a run play, a pass play, or a kick. In value investing, I try to keep it simple by first trying to understand a business and its products and services. Second, I try to understand whether this business in front of me has something special. Is it special enough to win repeat customers? We want to see something so special that the business is hard to copy or replace. Thirdly, like football, does it have able and trustworthy managers and coaches? For a moment, imagine you are the ball carrier and decision maker. What should you do? Survey the field of businesses and look for profitable opportunities. Look for reliable businesses that have a history of producing extra cash in good times as well as economic bad times. We call this extra cash, FCF, free cash flow. Like a receiver who is wide open, look for a business with minimal competition. Think of that as a bit of extra fat and weight on a swift runner. It slows us down. We want strong muscles and a practiced set of skills. We all like to stay within our budgets. However, the sports industry is different from value investing when it comes to bargain seeking. Can the team, coach, players, or business be purchased at a reasonable price? This is difficult. Many sports teams are under pressure to produce winning teams every year. They are forced to pay premium prices when competing for a small number of great players. This is a reflection of the law of supply and demand. However, sometimes a strong team can be built by hiring a good combination of good players. An example of this is the Oakland Athletics baseball team. The Oakland has reached the playoffs in 4 consecutive years from 2000 through 2003. Moneyball: The Art of Winning an Unfair Game by Michael Lewis is a book and movie about the Oakland Athletics baseball team and its general manager Billy Beane. Beane and statistician Paul DePodesta used sabermetric principles to run the team in a cost-effective way. Sabermetrics was pioneered by Bill James. It includes methods to collect and summarize data from in-game activity to answer specific questions. The term is derived from the acronym SABR, the Society for American Baseball Research, founded in 1971. In 2002, the Athletics became the first team in the 100-plus years of American League Baseball to win 20 consecutive games. Despite Oakland's low revenue, the team's analytical evidence-based sabermetrics approach was used to assemble a winning low-budget team. Other low-payroll teams, such as the 2003 World Champion Florida Marlins and the 2008 American League Champion Tampa Bay Rays, have competed in the World Series. Investing is competitive. Can we buy a high-quality stock at a bargain price? First, make sure that our target stock is a piece of a high-quality first-class business. In value investing, we are not under the time and pricing pressure of sports teams. We have more time to evaluate our options. When these 4 investing filters are present, there is a higher probability of success. One of my favorite quotes by Charlie Munger is very useful: if you are going to be an investor, you're going to make some investments where you don't have all the experience you need. But if you keep trying to get a little better over time, you'll start to make investments that are virtually certain to have a good outcome. The keys are discipline, hard work and practice. It's like playing golf, you have to work on it. Golf. We can talk about golf later when discussing our mental game. Let's get back to football for a moment and talk about defense. A good defensive strategy helps to prevent a loss. The role of the defense is to prevent the offense from scoring, by tackling the ball carrier, or by forcing turnovers, interceptions or fumbles. In investing, defense is acting to prevent the loss of your money. This is done by filtering out all the weak businesses. We can filter out the weaker businesses by buying only the ones with great long-term economics. We want to invest in businesses that have something special, sometimes called a moat. A moat is the strong defensive water barrier that kings built around their castles. In investing, a moat is a sustainable or enduring competitive advantage. Think brands. Next, buy only the stock of a business with able and trustworthy management. Some may be able, but if they are not trustworthy, they'll steal from you. Here is another way Warren Buffett talks about his formula when buying companies or common stocks. We look for understandable first-class businesses with enduring competitive advantages, accompanied by first-class managements, available at a bargain price. Look for those kinds of businesses. In football, the New England Patriots have won 5 Super Bowl championships. They have done this with variations of good offense, defense, and special teams. They have also had great players, coaches, and management. Let's also give credit to their enthusiastic fan base. In 1985, the Chicago Bears had such a team, and won that year's Super Bowl. Interestingly, the team they defeated that year was the New England Patriots. The special teams unit in football is responsible for all kicking plays. The special teams unit of the team, in control of the ball, will try and execute field goal FG attempts, punts and kickoffs, while the opposing team's unit will aim to block or return them. In investing, I think of the special teams as special situations like activist value investing. In activist value investing, an individual or group purchases large numbers of a public company's shares and often tries to obtain seats on the company's board. Their goal is to cause a change in the company's business. A company can become a target for activist investors if it is mismanaged, has excessive costs, or it could be run more profitably as a private company. The activist investors believe they can fix and make the company more valuable. But, are they making the core business more valuable? This is riskier than the 4 filter steps I mentioned. However, sometimes their strategy works. So, you should be aware that this can sometimes work out well if the core business has good fundamentals. In football, growth in skill, muscle, stamina, strength, and knowledge is important to success. In stock investing, most people think that business growth is important for a gain in intrinsic value and stock price. Yes, sometimes it is. But growth is just one component in the calculation of value. A business does not always need to grow if it becomes more efficient and it generates more profit. Also, when a strong business buys back some of its stock, the remaining shareholders' shares become more valuable. Why? Imagine a business that is equally owned by 3 sisters. When 2 of the sisters buy out the shares of the 3rd sister, the business is now owned equally by the 2 remaining sisters. What if those 2 sisters own a football team? The intrinsic value of that team has not changed. However, the 2 remaining sisters now each own 50%, rather than the 33% they had owned previously. So, their share has become more valuable. The intrinsic value of their share has become more valuable. As a player in football or value investing, you should think about good preparation and your inner mental coach. Are you motivated to learn the basics and keep learning along the way? Will you set a reasonable goal for yourself? Will you maintain focus on the most important variables? Are you thinking about proper self-management? And, how will you deal with wins and losses? I talk about these ideas in later chapters. What about players? The Chicago Bears did something interesting in this year's NFL draft. They traded up to pick at the 2nd spot. The Chicago Bears traded up to pick Mitch Trubisky, quarterback. An ESPN analyst said in 2013 Mitch Trubisky is a spread offense coach's dream when it comes to his combination of size, speed, savvy athleticism and arm strength. He is a shotgun passer who becomes more impressive the more you watch him. As a fan of the Bears, I hope they use him wisely, and that he performs well. Like experienced wide receivers, you want to catch businesses with a record of performing well. You want guys or gals who have made the catch before. And, you want ones you can trust to continue running for yards after they make the catch. Winning players and winning coaches must learn and grow their skills. Great quarterbacks learn to read defensive formations better. Great running backs learn to read and time their runs towards profitable gaps they can run through. Great linemen learn their opponent's tendencies. They learn to use proper timing and leverage to create those gaps for backs and receivers. As they become more experienced, players and coaches should also be able to develop new insights. They can all benefit from having the proper attitude. In investing, we can adopt the proper attitude too. The great Paul William Bear Bryant was an American college football player and coach. He was best known as the winning head coach of the University of Alabama football team. During his 25 years as Alabama's head coach, he earned 6 national championships and 13 conference championships. As we leave this chapter and move on to the next one, think about this great quote from the famous college coach Paul Bear Bryant: "Never quit. It is the easiest cop-out in the world. Set a goal, and don't quit until you attain it. When you do attain it, set another goal, and don't quit until you reach it. Never quit." I end this chapter with a note to my daughter: never quit learning more about the world around us. I have happy memories of the days when she played that other football called soccer. And I have great respect for the players and fans of this global game